Hello guys, so today we're going to be talking about risk management. So the main things I'll be focusing on today are entry and exit levels, learning when to cut a bad trade, scaling out profits, pre-market after hours, volatility, and mentioning obviously when day trading you should always use, in my opinion, you should always use a size you're comfortable with potentially losing. So today I'll be talking about risk management and um, this video is mainly aimed at day traders, so the first thing is entry and exit is key to me personally. I always buy and sell at support and resistance levels, as in my opinion, it always minimizes the risk. So you're not just like buying at random levels, as you see a lot of new traders. They usually just buy at random levels and get caught at the top and then hold in the bag. You do not want to get stuck bag holding. I did make a video on this the other week on how to understand support resistance levels. So and have some examples in that video. So if I do recommend watching that if you haven't, I think you'll find it really helpful. Also, another thing is realizing when you should cut a bad trade. Obviously, not every trade will be perfect. You can't win them all. So I'll give some examples. So sometimes like in pre-market or after hours, you might get a news drop and you'll see the stock runs like 50% or something, and then it might pull back to the VAP area, and you think, oh, it's had decent volume, and then so you buy around the VAT, which is like a support area for a lot of day traders, and then you're looking for that bounce off it, and then sometimes you'll get where it doesn't bounce and then the volume dries up all of a sudden, buyers leave, support starts to break down, and that is when would be a good example of when to exit a trade in my opinion. Um, Another example would be if it keeps rejecting certain resistance areas. So if you see sometimes on the charts, like if you look at the 1 minute or 5 minute, that's the charts I use to day trade mainly. You'll see you could get, for an example, you'd get 0.60, say it's been rejected 3 times, it's failed to break it. That tells you there's strong resistance there. So you potentially want to be looking for exits around that area, in my opinion. Another thing I want to talk about is I see a lot of people daily in the Discord mentioning how they've gone from green to red, and this is a common thing I seem to see every day. People be up like 10, 20, 30% and end up closing red. What I find works well in my opinion is scaling out as you're in profit, as the price is going up, keeps hitting those targets just and like scaling out. That's what I do, and in my opinion it works really well. If a stock rises above my entry, I will start to scale out along the way. I always want to secure those profits. I don't want to risk losing them. So if it's going up, I'm making sure I'm always securing profits. You can always leave a small size for in case it runs more. That's the best thing to do in my opinion. It's always worked well for me. Also, another thing I want to talk about is holding into after hours and pre-market. It can be extremely risky as the volume is usually a lot lower than market open. I think around 70% of volume for trading is mainly in market open. That isn't I haven't fact checked that, so you will need to you might want to check that. Um, so stocks can obviously be a lot more volatile in both directions. So I always keep that in mind if I'm when I'm day trading and if I'm playing pre-market or after hours. That's why you can see a lot of pump and dumps in pre-market and after hours because they can be a lot more manipulated as there's lower volume. So you always want to keep that in mind. And sometimes you might get some fluff news and it pops and then just pulls back straight away. As I was talking about earlier, most people start the day green and then red because they get greedy. Now, greed is a big thing in trading, and a lot of people get greedy. I've done it myself when I first started. I always say to people, small gains like 1% are amazing because if you do that 5 times in a week, that's 5%, and 5% in a week is amazing. But obviously, most traders want to see those 50% moves every day, but it doesn't always work out like that. Patience always wins, in my opinion. So another thing I do is I check dilution tracker. Um, if I see a stock that has not that much cash, I don't want to be bag holding that, as it will likely need to dilute for cash, which will make the stock fall even further. I will mention more about this when I make my swing trading guide video, but obviously, if you're in a stock bag holding and they've got no cash and it's at a pump, they're likely going to need to dilute, so you want to be careful of that. I always use a small size when day trading If I like how the stock is moving, I will scale in more. Risk management is key. It's obviously everything I say in this video is not financial advice. As always, you need to manage your own risk, and I hope you guys found this video helpful.